What annuity is best for me is a very common question that we get when it comes to retirees and pre-retirees planning their second phase of retirement. That's going to be the wealth preservation and decumulation phase in terms of turning your assets into income for the future. So my name is Dan Trinati. I am the CEO and owner of 360 Financial Group and the Trinati Insurance Agency. And today we're going to break down in simple terms for you to understand the 4 basic types of annuities that you have available as clients. That way you can make an informed decision about your goals and your needs before ever just jumping into a contract. We're also going to share with you guys some basic questions that you must be asking both your agent and yourself in order to make that informed decision. And if you ever want to get in contact with us, you're just going to go ahead over to our website at 360financialgroup.com. This is the contact page. If you go to the home page, there'll just be some extra information over here about the different types of annuities, the top annuity companies of 2025. And every annuity company has a different space that they compete in. Some are going to be better for income for these ages or that ages, or this is going to be better for growth. They're all going to be based on what your specific situation is. But when you go over here, the contact page, just submit the request down here, so that way we can get in contact you and go through a custom retirement analyzer report. So again, everyone's situation is going to be different. And whenever we're having these reports, we want to understand, what is your risk tolerance? How much income do you need in retirement? And what is currently guaranteed on your fixed income buckets, whether that's the Social Security, if you have a pension coming in, is there an income deficit that we have? And just going through all that stuff before ever giving our personal recommendation on what best annuity contract is going to fit your goals. And if you are liking our content, please go ahead and like or subscribe to our channel, or just drop a comment down below so we can make sure that you are appreciating the work that we're putting behind this, because it is not easy to get all this information out to you guys. But we do appreciate having you guys on here and tuning in. And hopefully this is providing some good value for you to make for your retirement goals. And what we're going to do now, I'm going to share my screen and we're going to go over the 4 basic types of annuities and also all those questions to ask. And if you want access to this document, it's going to be down there in the comment section for you to have, download, print. If you want to talk to us about this, or if you're talking with another advisor, that's just going to give you some really good foundations for you to make that informed decision for you and your family. So let me go ahead and pull this up here. All right, I believe you guys should now see my screen. Let me just zoom in on this a little bit. Okay, so one of the common questions that we get as people are planning for the second phase of retirement is, how much money should I have in investments like equities and stocks, and how much should I have in safer accounts like bonds or fixed index annuities? And there's a rule of thumb that you guys can all use as you're planning this, and it's going to be called the rule of 110. It's going to help us figure that out. So if you take 110 minus your age, that's going to give you the percent that you should have in equities, no more than that. So for example, let's say you're 60 years old and you're watching this video. 110 minus 60, so that's going to give us 50. Nice easy math there. And that means that no more than 50% of your assets should be exposed to equities, because if too much of your assets are exposed to equities and you're approaching the retirement years, the market's tank, that is going to be detrimental for our retirement. If you guys are around, you definitely remember 2000 to 2010 when the markets flatlined for about 13 years. It took until 2013 for the markets, the S&P 500, to go back up the levels it was back in 2000. That's going to be very important to protect a lot of the principal that you have, especially as you're approaching your retirement years. You could put that into stuff like bonds. Rates will change on that once in a while, or you could put that into fixed index annuities as well. Just another avenue for you to safeguard your money. Questions to ask, and I put this into different sections here as you guys are going through this. So very, very good questions for you to ask prior to ever purchasing an annuity contract. So we're going to have some personal goals, some tax stuff as we're going through this. Number 1, what is your main goal for this money? So every annuity contract is going to be different. So as we're going through the 4 basic types of annuities, there's going to be a different type of annuity that fits each one of these a little bit better. The guaranteed income for the rest of your life? Is it more safe growth? Is it legacy planning, like just leaving behind a larger amount of money for your loved ones? Is it tax deferral? And all the annuities are typically going to have tax deferral status on them as well. When will you need to start taking income from this annuity, if ever? We need to replace any income. Do we want that income to be guaranteed for the life or just for a certain number of years? How important is it that your principal is protected from market losses? And that's where that rule of 110 is going to come into play. Do you rather have higher upside potential or more guarantees? Typically, the more guarantees that you're going to have in an annuity contract or anything in regards to investment, the lower the upside potential is on that side. Some financial situation questions. And keep in mind, when you book a call on our calendar, we are going to help you go through all this stuff. So it's okay not to know all the answers now, but it's really just geared to get you guys thinking about this stuff as you're approaching or already in retirement years. How much of your overall portfolio are you consider putting into an annuity? And typically, we're not going to normally recommend more than like 30, 40, 50, 60%. So anywhere between 30 and 60, just depending on your age, your risk tolerance, and other assets you have in place. Do you have enough liquid savings to cover emergencies? What other sources of income do we have in retirement? What's your current risk tolerance? Do you see any large expenses coming up? Like, do you still have any kids? Are they going to school? Are they out of school? Another marriage coming up? What large expenses do we potentially have? And then some great questions for you guys to start thinking about are going to be more geared towards product and company specific questions. And again, this is all stuff that we would help you figure out as we're going through this. What type of annuity? There's fixed, index, variable, income annuity. Those are not the 4 types that we're going to go through today, but there are some different types of annuities out there. What are the fees? This is very, very important, especially if you're going to choose an income annuity. They typically do have a fee on it. Sometimes that's a really good thing. Sometimes that can also eat up your cash inside the policy. What's the surrenders charge schedule? Meaning how much of my money can I actually access every single year without penalty? Pretty much where that one's going to be as well. Happens if we pass away early? A really good question. Is it going to be passed along to a spouse? What is this situation going to look like? What company is backing the annuity? Very, very important. Has this company ever historically changes cap rates? So this is very important when you are considering an annuity contract as well, because there's some companies that will have a big flashy rates when you're first buying the annuity contract, but they might not be known for staying true to those rates, and they might change them in the future years. So we don't want to work with those types of companies. What indexes is the growth linked to? So this will be another great questions that we'll discuss here today as well. I'll show you some different examples from one of our favorite annuity companies on the market about what indexes they have available for as well. Tax and legacy questions, again, very important, just questions to know and think of how all this is going to work. Just money coming from an IRA, a Roth account, 401k, the non-qualified money, where is it coming from? How is it going to be taxed? A very, very good question. If it's inherited, what are the tax implications going to be of that? Is there a way to structure the annuity to be more tax efficient? And there's ways that we can do that in terms of how the death benefit of the policy would be paid out. And the final filter questions that you have as you are making this decision for you to make sure that you have a nice, clean clarity. Do you fully understand how this annuity works, including pros and cons? Everything has the pros and cons. What other options do we consider? You never just want to consider one option. You want to make sure as you're making this big decision, what other options did we have available and why did we choose the one that we do? And probably the most important of all, how is this going to fit into our larger retirement portfolio and our retirement plan? So very good questions to ask. And again, if you want to download this, just go ahead in the comment section. There'll be a link for you to download this Google Doc here for your reference. All right. So now, before we get into the 4 basic types of annuities, I want to give you some information of what to look for in a great annuity company. There's a ton of annuity companies out there, but some basics that we want to make sure whenever we're placing a client with an annuity that they cover these basic check boxes of great annuity companies. So number 1, A-rated or better. Very, very important. When it comes to money, I never want to gamble your money with a B-rated company or even A- as well. There's tons of amazing options out there that are all A-rated. And this is A. This doesn't mean A-. This means A-rated companies. Transparency on the renewal rates. So again, as we were talking about, some companies are known to give you a big flashy, hey, come give us 12, we're going to give you 12%, 13%, 20%, but then they're going to change the rates in their future just to get you in the door. And I do not like that. So I want to make sure that we're always going with companies that stay true or very close to exactly what they told you it would be at the beginning of the contract. Low or no hidden fees. Again, very important. Old annuities used to be riddled with a bunch of fees in there, and we don't want fees in our annuity unless typically we're putting it into income. That is the only time we would ever look at an annuity option that has a fee. Another check mark to look at, they have strong and diverse index options. You don't want to just have 1 or 2 good index options inside your annuity, because heaven forbid those ones just don't perform. We want to make sure that there's other good options inside to place your money, so that way you can see the most amount of growth and security. And also fair and flexible surrender terms. This means, hey, how much of my money can I actually withdraw every year without penalty? Because we don't want all your money to be locked up where you can't touch it, because that would do you no good. So this is really good to make sure that, hey, if you ever have an emergency that comes in, how can we access the money? This one is pretty self-explanatory here. Reliable customer service and claims reputation. Just making sure if you have any questions that they're good at getting back to you. Simple as that. It is, again, pretty self-explanatory, but always your first line of defense is going to be your agent. So just make sure that you have a really good relationship with your agent, because they're going to be the one at the end of the day that's ultimately helping you rebalance your portfolio every year, going over your goals. Did life change? Are there different goals that now came into play? So make sure that you're always number one, first line of defense, working with an agent that you truly trust with your money as you're going through all this stuff. So now we're going to get into the 4 basic types of annuities that you guys all have options to purchase. So that way you can know all this information before ever getting into it. And again, there are a couple other variations of these annuities, but these are going to be the 4 basic ones that you're hearing all over the internet or from different types of advisors. So we're going to go over number 1. This is going to be typically the most common one, and one of my favorite ones is just a basic growth annuity. So what is it? So a growth annuity, as you guys can just read here on the screen, it's designed to grow your money safely by earning interest on the performance of a stock market index without any downside risk. And these contracts are typically between 5 to 10 years. The higher length of the contract typically means that they're going to provide you a higher upside potential on the upside whenever the markets go up. So, and with the annuities, which is really, really good on the growth side. So again, if we're going back to the years 2000 and 2013, the S&P was just flatlining like this. And it took to 2013 before it ever went positive again. For whatever reason that happens inside of annuity contract in the markets, your annuity contract would have still have seen over those years on average about a 5% growth. Because every time there's a growth, year over year, we lock that in. So when the markets tank again, we lose nothing. And then now this is our new low point. So if we grew an account from 100,000 to 110, that's locked in, markets tank, we're still at 110 even though the markets are down here. And now the S&P tank, when the S&P goes back up, we participate in those gains again. Key features of the growth annuity, and I'm going to show you an illustration of how this works here in a second, that there's no market losses, so your account's never going to go down. You have the upside potential, tax-deferred growth, and often there are no annual fees. So in the next one that we're looking at, a growth annuity with a bonus sometimes does have an annual fee, and why I typically try to avoid those. I'm not a big fan of those ones. They sound really sexy, but it's just pretty much lipstick on a pig, and I would not recommend that for you. Who should consider a growth annuity? So if you're already retired or within 15 years of retirement, this could be a great option for you. You want cash growth, but can't afford to lose a principal. This is massive. Retirees' top 2 concerns are number 1, outliving their money, and number 2, market fluctuation. This is exactly what annuities will help you do, especially a growth annuity as well. If you have cash or IRAs that you want to protect and grow, great way to just transfer that into an annuity. And there are no transfer fees. So if it's currently sitting in a 401k or old IRA, you just transfer it into the annuity and it keeps the same tax status. So there's no tax implications. And on a growth annuity, it does give you the best option to see the most amount of growth inside of your contract. It's not going to be the best for income, but every annuity is better than another for one specific thing. A growth annuity is going to be best for a growth annuity. And here, very important, my top 2 favorite annuity companies. Again, there are a lot of other great annuity companies out there as well, but these are typically right now the top 2 that we're going to use whenever we're looking at a growth annuity for one of our clients. So if you remember going back to the different indexing options, here's an example of a Midland fixed index annuity right here. It's called their OptiBlend 10 fixed index annuity. There's 3 little red circles that I put on here. You'll see S&P 500 performance trigger, the cap focus, and also participation rate. So these are 3 very, very strong indexes inside of this contract. And this annuity is priced, I think, the best in the market when it comes to just a simple growth annuity. So the 1-year performance trigger, how that works, just so you guys start having a better understanding of how your money is actually growing inside of an annuity contract. The S&P 500 performance trigger is really, really neat. So if the S&P 500 ever goes up, if it's ever positive, you get a guaranteed 8.25%. So if it does 0.0001%, you still get a guaranteed 8.25% on that. You also have the 1-year cap focus. So in annuities, there's typically a floor, how low can you go, and a cap, how high can we go. So if the S&P 500 ever does 10% or 10.25, you would get 10.25%. If it does 5, you get 5. If it does 6, you get 6. And the 10.25 is like the ceiling. How high can we go? And that's going to be what's called the cap rate inside of an annuity contract. And the third one, what's called a participation rate. This means what percentage of the gains are we going to get in this contract. So there's no cap on this. It's going to be based off of a participation rate. So if the S&P 500 went up 10%, we get 62% of it. If it goes up 20%, we get 62% of it, but we're still protected with that 0% floor. So this would, as of right now, give you the most growth potential if the markets are really hot. And these ones, if the markets are kind of staying a little bit more steady, could also give us some great options to get on here. Because if the S&P goes up 10%, we would see 6.2% in here, but with the cap focus, you would have seen 10.25 return on your cash value, and then in the performance trigger, you would have seen the 8.25. So I always like blending them between a couple different options, and this is stuff that we would rebalance once a year too. So down below would just be an example of how the growth annuity contract would work. And this, again, is one of the most simple annuities to understand. I do not like putting bells and whistles on an annuity contract. I think it creates too much complications and too many ways for an annuity company to change stuff on you, the client's behalf. So let's say we put in $500,000, and let's say year one we saw 8.85% growth, so we would have had interest credited of $44,000, and that's what we're going to see here over in that account value section. The 8.85%, 2.27, and then I want to bring you down to year six. So let's say year six, you saw the money, or the S&P 500 went backwards. And this is going to be where your money is now protected. You're going to see the 739,280. It's going to be the 739,280 in the following year as well. So this would be a hypothetical. Now, this is not guaranteed. This is still hypothetical based on how the S&P 500 is performing. And this was, I believe, the last 10 years that we were looking at here. If we're looking at that, we would have seen about 7.63% growth inside of the annuity contract based on the last 10 years of data. After 10 years, we would have taken that 500,000 and turned it into roughly $1 million. And one other really cool thing that Lincoln has, and also Midland as well, is going to be a guaranteed minimum on what you can access out of the contract. So for whatever reason, let's say the markets went backwards for the next 6 years, they never went up ever again. You're still going to get a minimum over here, minimum surrender value, what you have access to, of 522. So if that money was just, let's say, invested in the market, seeing 0% return, after 6 years, you'd get $500,000 out. Over here, you would have gotten $522,000 out of the contract. So that's going to be how a growth annuity works. My favorite companies on that side. I love the growth annuity just because it gives you a lot of flexibility over the account, and it still gives you a lot of great opportunity for growth while also protecting your principal at the same time. The second type of annuity that we're going to look at here is called a growth annuity with a bonus. To keep this extremely simple, this is the same type of annuity as the basic growth annuity. And if you guys are listening to people talk about annuities or see stuff on social media, they're gonna be, hey, come, put $100,000 over here and we're gonna give you a free 20% out of the gate. So your money is growing off of an extra $10,000 or $20,000 from day one. There is no such thing as a free lunch. So that 10 to 20%, whatever bonus they're gonna give you, is gonna come at a cost. If we go back to this indexing strategy, for example, with Lincoln, if they ended up giving you a bonus over here, these numbers are going to end up being a lot lower. So instead of like 8.25, it might be 5%. Instead of a 10.25% cap, it might be a 6 or a 7, which in the long run is going to come at a massive expense for you and your retirement. So we typically like to stay away from bonus annuities. Just again, too many bells and whistles on an annuity contract. We were not a big fan of that. When I first started out, it sounded like so sexy, but when you learn how annuities work, again, there's no free lunch. That is going to come at a cost. Some of them do have a rider fee attached to that as well. So yeah, obviously some reasons why I usually don't recommend them. Most of them I think are marketing gimmicks, lower future growth fees are going to eat into. There's just a lot of stuff that I do not like about them. So try to stay away from a bonus annuity. And the only time that we're typically going to recommend a bonus annuities, if you currently have an annuity, you've had it, 2, 3, 4 years, and it is just, sorry, but it's straight garbage and you do not feel comfortable with that annuity, there would be some annuity contracts with bonuses that we would look at to get you into a better situation. If you're starting fresh, I would typically never recommend a bonused annuity. We would just do a basic annuity with Lincoln, Midland, or some other good companies that we'd also analyze based on your situation. We're probably going to stay away from the bonus annuities on that side as well. The third type of annuity is going to be an income annuity. And this is best for people that want to just turn their retirement savings into a guaranteed income stream for the rest of their life. And whenever you're looking at an income annuity, I'll show you down here in a second, all the numbers from day one are typically going to be guaranteed. So if you put in $500K right now, if you turn income on in year 3, year 4, year 5, exactly to that penny, what your income is going to look like in those years. And this is typically going to be better for someone that, again, just wants a guaranteed income stream. It's almost going to be like a personal pension in their retirement years. There's a couple of different types of income annuities. Key features of them, it's guaranteed. So your income, literally, you cannot outlive your retirement savings. There's also different options for joint income, like with a spouse. If you have a spouse, they can make sure that there's a payout not just for your life, but also their life as well. So this is a key feature, but also potentially a downside of an income annuity. Yes, it does have typically a 1 to 1.5% fee every single year to turn on the income. I normally hate fees inside of an annuity contract, but when it comes to guaranteeing you the most amount of cash, I would never purchase an income annuity to get the most cash flow. That's just not what it's designed to do. It's designed to get you the most amount of cash. And this is the only time I would potentially recommend using a fee inside of an annuity, because it's going to increase your income about 20 to 25-ish%, somewhere in that ballpark. It'll depend by company for your income. And there's different annuity companies that are going to be better for joint payouts or based on what state. Some companies have different rates in different state on what they're going to provide you as an income payout. If you're ever looking at an income annuity, there are softwares that us as agents can use to show you that you are getting the best contractual rates on the market. You can ask your agent to see a website like Annuity Rate Watch or Annuity Genius, and I'll show you something like this in a second. So that way you can compare side by side what company is going to give you the highest contractual guaranteed rates. Who should consider an annuity that's going to generate the income? If you're between 0 to 10 years of retirement, it could be a good fit for you. If you want to lock in the retirement savings or your retirement income for the rest of your life. So that way, so a lot of our clients, let's say their Social Security is going to be $30K a year, but they have $60K a year that they have of expenses. If we can get them at least another $30K, obviously we'd have to factor in some tax stuff. Your income for the rest of your life is pretty much set. Yes, we'll need to factor in inflation as well, but that's typically where another brokerage account or an IRA will help on that side. But for a lot of our clients, it does give them peace of mind, knowing that without question, every month on repeat, that their expenses are all covered, which is obviously going to help out with the worried about living retirement savings and prefer certainty over market risk. So everything that you look at inside of an annuity contract, when a fixed indexed annuity for income, so an income annuity, everything is going to be guaranteed when it comes to the income side of it. And here's just a breakdown of what's called Annuity Rate Watch. That's going to help us figure out what company is going to get you the highest contractual guarantees in the market. So this was an example here of a 70-year-old male going to turn on income in 3 years. They put $500K into this, and there's stuff that we can filter by up top. Like I always want to search for A-rated company. So if we didn't have A-rated, there'd be some like B+ ones up here. So I always want to look for A-rated company. And this just kind of tells us what the best options would be on the market. So AIG will be one. American General, also now known as Corebridge, they'll pop up pretty frequently. Federal Life, again, if I can go with an A or A- company, I'm probably going to choose the A company on that. F&G typically has a good one as well. And National Life Group. Nationwide will also pop up, and about 90-95% of the annuity companies are on here. Midland Financial is not on Annuity Rate Watch. They are on Annuity Genius. So the software will be a little bit different, but most of them, the top ones, are going to be very, very close to each other as well. And one other good thing is if you guys are considering an income annuity is that for whatever reason, you have to go into long-term care or a nursing home and you cannot perform 2 out of the 6 daily activities, there is going to be what's called an income doubler on that policy or an enhanced payout. So if we're looking at this, what I want you to read is the benefit payout at age 73. This would be the payout here. The first one we're not going to look at, it's called a depleted benefit. So after a certain number of years, they're going to drop the payment down. I don't like using those. So for example, if we look at AIG, probably the one I would decide with on this one, we'd get $53,000 per year after about, I think it was 3 years that I had this at. And if whatever reason we could not perform 2 out of the 6 daily activities, there'd be $105,000 paid out to this annuitant, for up to 5 years to help with any type of expenses that they have. And knock on wood, they get out of it, they get in better health. It would just return back to that $53,000. So this is just a really good tool if you guys are looking into different income annuities, what to look at, and just have an agent bring up the software so that way you can compare all the different options that you have available. Again, some of the top annuity companies that we work with or on the open market. AIG Corebridge will pop up a lot. National Life Group, Midland, Fidelity and Guarantee, Nationwide. There's sometimes for different scenarios there would be a different company that would pop up here. And again, but just always ask for one of your agents to use the calculator. The last annuity contract that we are going to discuss today is what's called a multi-year guaranteed annuity. And this is hands down going to be the simplest annuity contract for you to understand. It's almost identical to like a CD. So you're just going to give the annuity company your money and you're going to get them guaranteed, let's say 5% for the next 5 years or 7 years. No more, no less. That's it. Doesn't matter what the markets ever do ever again. So someone that just wants the most amount of security, we're going to go with a multi-year guaranteed and no fees on that. That's it. Who wants to consider this? Someone that wants just a guaranteed growth more in the short term. If your CDs or bonds are just not performing where you want them to be, we would just get a guarantee on that. If you want to wait out market volatility. And again, this is just a very, very safe option and more like a easy bond alternative on that side. But if we break all this stuff down today, and I hope you guys got a very good information about all this stuff. And again, I'll also share this with you as well. If you just want to go down to the comments tab down below, I'll share this document so that way you can see my personal recommendations, just again, all the questions to ask as you're going through this with yourself or with another agent. But if we just want to break these all down, so if your goal is safe and long-term growth, you're going to want to go with the growth annuity. Very low risk. It's good for pre-retirees, IRA rollovers. If you're worried about markets, market volatility, growth with bonus, yeah, it's kind of like a bait and switch. So I typically stay away from that. There's a lot of just red flags that happen in the growth annuities with the bonus. Income annuity, it's going to be best for guaranteed income, very low risk. You know exactly from day one the amount of income that you're going to get based on when you turn it in. And forget if I mentioned to you guys as well, but with the income annuity, there are options for joint payouts. So some of our clients want the income to be guaranteed for both their life and for the spouse's life. And fun fact for you, as we're approaching the end of this, Babe Ruth actually had an annuity when he retired from the MLB that paid him about I believe like 17,500 per year, which is about $400,000 in today's dollars here in 2025. That also paid out for his wife's lifetime as well. And if you're gonna look into MYGA, it's just best if you just want a guaranteed 5.5-ish% growth, no more, no less, every single year for the next 3 to 7 years. So it's gonna be the best options on that side. But I hope you guys are enjoying this. If you do have any questions, again, make sure to like, subscribe, drop a comment down below and ask us. And I know this was a lot to go over. At the end of the day, if you still have any questions on this stuff or you do want to chat, just head over to our page over here. Go to the contact tab on the top right. And we can help get you a custom retirement analyzer report sent over to you. We'll break down all of what your income looks like, all your assets, what your expected income is going to look like, what your expected retirements will look like as well. So that way you guys can all make an informed decision about your retirement and your retirement goals and the strategy moving forward. So I hope you appreciate this. Thank you for tuning in. Any questions, let me know, and we'll connect soon. Bye.